If you're running a construction business, you know just how complicated the financial side of things can get. Between job costing, cash flow, payroll, and taxes, it's easy to get overwhelmed and make mistakes that can cost you thousands or even put your business at risk. So today I'm going to walk you through the biggest construction accounting mistakes I see contractors make all the time. And most importantly, I am going to show you how to avoid them. So let's jump right in. First up, one of the biggest mistakes I see contractors make repeatedly, and it's very simple, it's mixing personal and business finances. Now, I know it might seem easier in the short term to pay for your tools or cover personal expenses from your business account, but believe me, it's not worth the trouble it creates down the road. Let me tell you from experience. I've had clients who spent hours, sometimes days, sorting through bank statements trying to separate which charges were personal and which were business. Not only did it waste a ton of time, but also they missed valuable tax deductions because they couldn't accurately track every expense. And it's not just about losing deductions or wasting time. Mixing funds exposes your personal assets like your house, car, or personal savings to unnecessary risks. If your business ever faces a lawsuit or runs into financial trouble, those personal assets can be targeted because the finances weren't clearly separated. Here's how you can fix this right now. Open a separate business bank account. It's that easy. Just do it. Use it strictly for your business expenses and income. This one step gives you crystal clear clarity on your numbers, ensures you maximize deductions, tax time, and legally shields your personal finances if your business faces trouble. The second big mistake I see contractors consistently make is not keeping detailed records of their job costs. Construction isn't like running a shop where every item costs the same each week. Every single project is unique and costs can vary significantly, even on seemingly identical jobs. I've seen contractors price jobs based on past projects without even double checking the details. They assume because two projects look similar, they'll cost about the same. But in construction, things rarely go exactly as planned. Material prices spike, labor can take longer than expected, or unexpected problems pop up, throwing your entire budget off track. So without detailed job costing, this client would have kept pricing future homes incorrectly, continually undercharging and eating into their profit margins. There are several ways to track your costs. You can go a simple but less detailed route, which means you only separate the cost by project and by materials, labor, subcontractors, equipment rental, and permits, those five. Or if you want to have more detailed budget versus actual report, you can separate by cost code. A great actionable step to take immediately is to start using construction-specific software like Buildertrend or JobTread. With these tools, you can track each project's expenses in real time down to a penny. I've seen clients go from guesswork to total clarity in just weeks using these systems. It doesn't only prevent costly mistakes, but it also saves hours during invoicing and tax time. Next mistake I see being made all the time is ignoring the cash flow. You might think, I have plenty of work lined up, so I must be doing great. But here's the reality. Being busy doesn't mean you're actually making money. Cash flow isn't just about how much money you're eating, it's about when that money hits your account. Let me explain. Imagine you land a big remodeling job worth $80,000. You're excited because it seems like great revenue, but here's what typically happens. You have to pay $30,000 upfront for materials, then cover payroll and subcontractors weekly, and all the while your client is taking their sweet time to pay you. Suddenly you're $40,000 in the hole, waiting weeks or even months to get paid. Being busy is actually costing you money because of poor cash flow management. Here's how you can fix this. First, always request deposits, ideally 20-30% upfront before you even begin the job. When you secure a good deposit, you have a cash cushion to cover those early expenses, reducing your financial risk. Next, set every clear payment schedule and milestones in your contracts. For example, you might structure it like this: 30% upfront, 30% at the half mark, 30% upon substantial completion, and the final 10% upon approval. This prevents clients from dragging their feet and ensures you are getting regular payments. Also, set up contracts to include late fees as well to avoid any sort of setbacks. And here's one more thing. Start reviewing your cash flow weekly. Trust me on this, monthly reviews might be not enough because you won't catch problems early enough. I had clients who almost went out of business because they only looked at their cash flow once a month. By the time they realized their biggest client hadn't paid on time, they were already behind on payroll and nearly missed a critical payment to suppliers. Weekly check-ins really helped them with early warnings so they could act very fast on the issue. Mistake number 4, mixing up markup and margin. A math error that's tanked more subcontractor profits than material theft. Let's cut through the confusion with hard numbers. Say your plumbing job cost $85,000 in labor and materials. You slapped a 30% markup on it, charging $110,500. Your gut says you've made 30% profit. Reality, your margin is actually 23%. Here's my profit protection formula. To calculate markup, it equals selling price minus job cost divided by job cost. Calculate margin, sales price price minus job cost divided by sales price. Let's say you need 25% margin to hit your profit targets. Using that 85K job, selling price equals job cost divided by 1 minus margin. So your markup here would be 33.3%, not 25%. I encourage all of my clients to build these formulas into their bidding templates and switch to margin-based pricing instead of markups. Mistake number 5, treating your financials like a once-a-year thing instead of a daily toolbox meeting. You need 3 financial checkpoints that take less time than your morning coffee. First, every Friday, let's say 3 p.m., open QuickBooks and check 2 numbers: days sales outstanding, how fast clients pay, and current ratio, cash versus debts. If DSO climbs about 45 days, you're financing your client's projects. Second, every 15th of the month, compare your job cost reports to original estimates. Last month, this caught a $14,000 plummet in overage on the restaurant bill because someone miskeyed material quantities. Third, quarterly, sit down with your accountant to analyze gross profit per project type. One of my clients realized his tenant improvement jobs had 22% margins versus 34% on ground-up retail, so he dropped TIs and boosted annual profits by $187,000 without working harder. I've seen contractors recover 6 figures in underbilled change orders just by reviewing AR agent reports weekly. Your financials aren't history books, they're your profit playbook. So if you ignore them, you're literally burning cash on job sites without knowing it. Mistake 6, trusting a generic accountant with your construction business finances. It's like handing a plumber an electrical blueprint. I audited a contractor last year whose CPA recorded retainage as straight income, inflating their tax bill by $62,000. Construction accounting isn't just different. It's a parallel universe with its own rules. Let me break it down. Your accountant needs to speak fluently in AIA billing formats, navigating conditional lien waivers, and know when to apply the percentage of completion method versus completed contract for optimal cash flow. Here's my test during interviews. Tell them, walk me through how you'd handle a $500,000 change order that's approved verbally but not signed off until 3 billing cycles later. If they don't immediately mention tracking it in work in progress reports while documenting everything through preliminary notices, then you should keep looking. I've seen too many contracts get burned by accountants who treat progress billing like recurring SaaS revenue, missing the nuances of retainage accounting or misclassifying equipment depreciation schedules. Mistake number 7, letting change orders destroy your profits because you treat them as afterthoughts instead of lifelines. I had a client lose $78,000 on a profitable $1.2 million hotel remodel because his team missed 37 change orders, not from lack of paperwork, but because his system tracked them in 3 different places: the sticky notes, Excel, and foreman's notebook. Here's the brutal math. Every undocumented change order costs you 2.3 times its value in rework, delays, and relationship damage. So the fix? Implement a 4-step protocol. First, every change order gets logged immediately in your project management software with photos, signed T&M, tickets, and updated specs, no exceptions. Second, the project manager sends a daily digest of all COs to the client's rep and accounting by 5 p.m., let's say. Third, Friday afternoons, you personally review the CO tracker, flagging any unbilled items over 72 hours. Last month, this caught $14,000 in unapproved kitchen electrical upgrades that were about to become write-offs. Change orders aren't emergencies. They're profit opportunities waiting to be systemized. And finally, one of the most common mistakes is failing to use technology effectively. There are incredible tools out there designed specifically for construction businesses. Tools like QuickBooks for accounting, JobTread for project management, ADP for payroll. They're all making life so much easier. Instead of manually tracking everything or using outdated methods, switch to these tools. You'll save time, reduce errors, and have better insights into your business. Plus, these systems integrate really good together, giving you a clear picture of your finances in real time. Now, I know this was a lot of information, but here's the good news. Every single mistakes we talk about today, it's completely avoidable. You don't need to overhaul everything overnight. Just pick 1 or 2 areas where you see room for improvement and start there. And if you're feeling overwhelmed or unsure where to even start, that's okay too. Reach out to a construction accounting professional who can help you get set up properly from the beginning. It's an investment that pays for itself many times over. Thanks for joining me today. And if you found this helpful, don't forget to hit that subscribe button. Stay tuned for more tips on building a profitable construction business.